ecosystem partner network. The key thing that Challenges really tries to focus on is, once they're inside that network, what can we do to strengthen and build capacity, commercial capacity, within the organization, what Randall was calling talent, to make sure that those organizations are actually fit for what it is that they are aiming to do. If the commercial capacity is not there, if the financial returns don't work, then any potential social and environmental impact won't be realized. So that's absolutely key. To come back to the question then, pre-investment support is absolutely critical. Stepping back even further from that, the sort of selection of organizations to potentially be supporting into that pre-financial pipeline is also key. I mean, let's not forget here, the world over, most small businesses fail, and quite rightly. Just because we're talking about impact investing here doesn't mean the rules are any different. We have to be very, very clear on that point. In my 9 months experience with Challenges, I've seen too many examples of organizations that have been included into ecosystems and being supported that have no right to be getting largely donor money that could be better served elsewhere, either because the business model is fundamentally flawed, or the entrepreneur's just not suited to what they're doing, or all manner of factors. That, I think, is absolutely key, and that's something that currently, in my experience, is missing from the market. Once they're in that ecosystem, pre-investment support in terms of pulling together business plans, critically looking at the business models, operating models, to understand their true sustainability, is a key part of going down the road of pulling together an information memorandum to then use to look for equity funding. The way that we would normally do that would be through other intermediary organizations, either investment funds, impact funds, NGO, enterprise programs. It's very, very difficult for the SMEs at that point in their life cycle to be able to afford the kind of professional services. Likewise, we don't believe that it is appropriate for intermediaries to be paying a Western day rate for this type of a service. So what we've done through Challenges is developed a fairly unique operating model whereby we can blend both consulting services operated on a day rate with a mentoring model which is operated on a pro bono basis, which if you sort of look at it on an aggregated day rate basis, if you like, can provide up to 90 or 100 days of support, very, very highly experienced support, at something around £85 a day, which for SMEs directly is expensive. For intermediaries, based on what they're used to paying, is actually a sort of very nice, attractive model. And what that ultimately means is, with budgets that intermediaries have for supporting SMEs, that budget then goes much further, caveated by the fact that it really, really should be focused on those organizations or entrepreneurs or nascent businesses that really, really deserve to be in the ecosystem network.
Thank you, Mark. Now, to Mark's left, let me introduce Pankaj Jain. Pankaj is the founder and partner of Impact Law Ventures. Pankaj, you've been in-house counsel to Acumen in India, and now you run your own legal practice focused on advising startups and nonprofits, especially in impact investing, social entrepreneurship, and venture philanthropy. Are there particular legal challenges that are unique to the social enterprise sector, or do these businesses by and large face the same legal issues that all startups and small and growing businesses face?
To be perfectly candid, Robert, I think the kind of issues and challenges which social business enterprises face are no different from any other conventional organization faces, right? If you follow the principle of inversion, if you are a for-profit startup, right, or even if you're a Fortune 500 company, you can never say ignorance of the law is an excuse, right? And pretty much on those lines, even social business enterprises are required to comply with the same requirements which apply to, say, antisocial enterprises. To specifically address your question, Robert, in my last 4.5 odd years working at the intersection of startup and social business enterprises, one of my biggest insights has been that access to affordable legal counsel who will probably be guiding as a mentor, coach, consultant, advisor to social business enterprises about what are robust corporate governance mechanisms, example, having a functioning and effective board, or having a compliance check matrix in place is very important. I was reading a very interesting quote by Martin Luther King over the weekend, which went to the effect of, laws are not meant to effect a change, but to restrain the heartless. And I think that applies in a lot of measure about that interesting dynamic between law and social enterprise, because effectively law does not give any preferential treatment to social enterprise. And the kind of issues and challenges which most of the social enterprises, especially in emerging market economies, where fortunately and unfortunately it's a nightmare to do business, fortunately for consultants like myself, and unfortunately, of course, for the social entrepreneurs, it is very important to keep sight of the fact that how you go about cracking the usual issues and challenges plays a very important role. In my experience, one of the biggest issues and challenge which social enterprises actually legally face is when they're raising capital. And it is very difficult to find out that fine line between what is venture capital and what is vulture capital. I'll give you a very small example before concluding. For instance, I represent a client called UNITUS Seed Fund. And that was one of my best experiences of representing a responsible impact investor client who says that we want to have very, very responsible investment terms with the entrepreneur. We want to make sure we are walking the line of what is bona fide capital in the social enterprise impact investment space. And the entrepreneurs see value in that. And when I look back at that experience and reflect on it more, it makes me realize that one of the biggest issues and challenges with social entrepreneurs themselves should be cognizant of is reaching out to the right people to figure out what is kosher and what is not when they're raising capital.
Okay, thanks. Thank you, Pankaj. So from this initial set of observations, it appears that social enterprises, like many small and growing businesses, need a lot of support to grow and raise capital. And yet, resources tend to be limited. There's a limited ability to pay. And so it raises the question, how do we pay for all the services? Who pays and how do we pay for all the services that need to be provided? And I guess, Mark, you talked a little bit about the role that the model that Challenges uses. Tell us a little bit more about that and you know, some of the advantages and disadvantages of using a volunteer/pro bono model.
Perfect. Thank you, Rob. I guess I sort of spelled out before why I think it's important to have a blended model. Just to delve into that slightly more deeply then. It was very, very important for me when we were establishing this operating model to make sure that it wasn't based on an ability of an organization to pay a day rate or not to pay a day rate. It's all too easy just to make that judgment to say, well, okay, if you have financial resources, then you have the wherewithal to be paying for it, and if you don't, then we'll give you exactly the same resource and service and support, but you don't pay. I think it was very, very important for us to differentiate what our consulting services are relative to what our pro bono services are. So pro bono really comes in the form of mentoring, which is the insertion of a generally very experienced individual or team of sort of 20 plus years into an organization to basically sit next to an entrepreneur or a management team over a fairly extended sort of 3 to 6 month period of time, and just to really help them and build their own internal capacity, build their confidence, give them support on a variety of different fronts, be it honing their business model, writing a business plan. Now, that mentor is not responsible for any tangible output. They're there simply as a crutch, as somebody that the entrepreneur or management team can be called upon to advise them on a number of different things. Consulting, by contrast, is very much more a sort of traditional advisory service, which is day rate based. It's very much more on a sort of specific terms of reference and has tangible output associated with it. be it a value chain study or a market study or pulling together a strategy or an implementation program, whatever it might be. So it was very important for us to make sure that they were two very, very different offerings. I guess the sort of positives and negatives, obviously, the negative to the consulting model is obvious. There's a cost associated with that. On the flip side, the positives to the pro bono model, obviously, is that the entrepreneur or SME is getting a huge amount of value and experience for effectively just covering costs. What we've been trying hard to change, though, on the pro bono model is to actually get the entrepreneur themselves to be contributing some of those costs. In the old model that we used to follow, it was always intermediary organizations who would pay, and the entrepreneur or business itself would actually not have to pay anything, would not make any contribution towards that service at all. And what we found with that was that service and that support actually had very little value. Management didn't give it enough time. There just wasn't the right sort of focus and attention and making the most of that individual being with that organization for the time that they were there. What we've subsequently found is if we actually get them financially vested in it, even if it's just a sort of relatively small financial investment in that process, they're much more focused, take on board the advice and the support that they're getting much more effectively than they would if they weren't paying for it. So I think for me that's the sort of key learning from the pro bono model.
Okay, thanks, Mark. Let me throw this one out to both Abhijit and Pankaj. How do you make legal, and in your case financial advisory services, affordable to social enterprises while still making them financially sustainable for yourselves as organizations to provide? And are there creative financing structures or payment models that allow you to do that?
Yeah. Before going into the models, I think one of the aspect what we realized while raising capital for the last 4 years is, I mean, there are very good pro bono providers, but not all pro bono providers are good. So one has to be very careful about, taking the service. Rather, it's better to pay than, repent later. So what we have, sorry, I'm making a bit, strong statement here, but what we realize is once we are doing a, A round after the seed round, and the agreements, at the initial stage were, done very loosely. So while giving an exit to the seed investor, we had so much of trouble because there was nothing clearly defined. The seed investor was, really demanding, certain things which were very difficult for the entrepreneur to give. So I think because that point of time, the entrepreneur never thought that this could be an issue in round 2 or the main capital round, we went through a pain for almost 3 months to sort out the issues. Finally we could, because of, our, the way we handled the issue, we could do that. So this is one of the aspects I always tell the entrepreneurs, hire somebody wherein you can work out an innovative structure of payment, but don't take a service because it's just pro bono that, like I'll give an example again, like, there are, some of the corporates sometimes do that. But I found a very interesting model in India wherein the large law firm, the bigger ones like the AZBs, the Nishit Deshais and others, what they do is they have a corporate social responsibility practice. They don't do pro bono. What they do is make the charges affordable. Rather, because that's where their brand is involved, their people, partners are also involved. So there they can't, though they charge less, but they will give you a very good advice. So I think it's better to avail those services where it is affordable, but not very high, but take with the firms which have experience in that. Coming to the innovative structure of, taking payments, one thing we were very clear from the beginning, that for an entrepreneur or for a startup company to pay us in the beginning would be difficult. So we are very much aligned and said, okay, we'll have only success-based fee, no retainer. So never in any of our raises we have said that we'll charge a retainer. It's all success. If we are able to raise the capital, the money hits your account, please pay us. Otherwise, we take the risk. Number 2, what we saw is one case, where the raise was small. The the percentage was coming very high, like, it went up to something like 6, 7 or 8%. Obviously, it's too high to charge that. So what we brought it down is said, okay, let's not look at so high. Let us make it in two parts. One is, you pay us a success fee, a certain percentage, and give us a stake in the company, a small token stake. That could be the other option. Third, what we did is, in one company we found that initially the raise was, let us say, I'm throwing a number, let us say it was 5 million. And the challenges of raising 5 million is pretty, high. So when we finally got the, term sheet and everything agreed, the amount became much smaller. And then, in terms of percentage, again, it was becoming pretty high for the business to absorb that. So he said, no problem, because we are, we know each other for long, we have worked with you. Why don't we do an arrangement wherein, okay, for the next round when it is a larger round, you pay us the fee. That's one way of looking at it. The other option we did is also to say, okay, you can't pay it now, so let's see in the next 1 year, how your revenues are growing. So as the revenues grow, why don't you pay us something? Because, we have worked so closely with you, you know us. If you think our professional service has been good with you, and we found entrepreneurs pretty open to that, so that they are not sometimes giving upfront, there's some way we structure it around. But ideally, we would prefer when the money comes in and we get our fees, because we have worked hard on that. But depending on the entrepreneur's need, we have devised some of this type of models, which ultimately has worked. Not always. Like one case, it so happened that we told, okay, we are doing this round at this fee because with the specific understanding, and it was written and confirmed that we'll do the next round of equity. But there, the entrepreneur finally didn't give us the next round. So that was, we burnt our fingers, but in business sometimes it happens. So.
Pankaj?
At Impact Law Ventures, we have a very simple model. We only look at the revenue. So for us, also because the ethics rules for lawyers in India, even though it may be an oxymoron to some people in this audience, do dictate that there cannot be any success fee model, there cannot be any equity stake model. So professional fees essentially has to be paid in the form of money. The kind of innovation that we at Impact Law Ventures have indeed managed to pull off is we like to play Robin Hood. So we have a cross-subsidy model wherein clients pay according to the capability to pay, and we have very methodical sniff tests in place in terms of figuring out if this is a kind of activity that a client is doing, this is the ballpark indicative legal fees that they'll be falling within. And in combination with that, we also give them the option of both hourly and lump sum fee. Having said that, I think one of my biggest learnings and how things can be made better in terms of making these kind of services more affordable to social entrepreneurs is designating these kind of services as within the technical assistance model. There is a role of a market maker who will come in, provide that kind of subsidized capital, as was also the theme in the plenary session earlier today, which will make it worthwhile and affordable for these kind of focused services being provided to entrepreneurs. Because another thing which I've realized over the course of last 1.5 years is this is a sweet spot of low economic margin, high volume work. Though ideally business sense would have me flip it the other way around rather than the way it is, but unfortunately that's the nature of the beast. And the only way to successfully capture or address this kind of a problem is if there is a technical assistance play being provided to service providers, or there's some kind of subsidized support which effectively makes unit economics much more positive.
Very good. Randall, do you want to add to that?
Take a brief shot at maybe summarizing a bit. That I would say there's sort of three things that collectively the providers and the recipients of these services need to think about. The first is that these services need to be valued, and this goes to Mark's point. There's got to be some sort of skin in the game, or else it's very likely that it will not be effective. The second is that it needs to be targeted, so you need to actually know what you're getting and be very clear on what the scope of work is. And the third is that it needs to be integrated, and this is where the development agencies tend to fail, which is they divorce their investment activities and their capacity development activities. So in the US government, for example, we've got USAID and we've got OPIC. And the companies that USAID supports are not at all related necessarily to those companies in which OPIC is willing to either guarantee an investment or make an investment. And you see that time and time again, not just with my home country, but with the World Bank and IFC and others, where they divorce those two. So we need it valued, targeted, and integrated.
Good. Thanks.
Well, sorry, can I ask
Oh, please, Mark.
I think that's it's a really key point, and I think this sort of whole area of technical assistance, or where technical assistance fits in, for me, is what stands impact investment apart from traditional investment. Generally looking at much more nascent organizations and entrepreneurs that are looking for investment into social enterprises. It's very, very risky. But there kind of seems to be much more of an appetite for risk in this space than there would be in the traditional investing space. What we try and do at Challenges is put together, working with all of our ecosystem partners, structured packages of support, and they are both financial and non-financial. We found that if you can actually get those two pieces of support actually gelled together and working in tandem, then the impact of that investment and how quickly it's realized is actually much, much better. But it's when you have those two pieces that are completely divorced and not integrated together is where you also start to have problems. So having that technical assistance, capacity building, whatever you want to call that sort of human capital piece that sits on the side, having that integrated with financial investment is absolutely key.
Great. Yeah, and just before Abhijit goes on, I want to say, please, we are open for questions from the floor at any time. So do please stand up. There's a mic right behind you.
Good morning. I am Ramona Ramos. I represent World Fair Trade Organization Asia.
Hello,
So in Asia, we have around 140 trading members, and these are small organizations. You were talking about, high risk in investing with these small producers, and of course very challenging. And I agree that there is this impact investment together with Sujog, who is putting things together in order for these small producers to reach that level of standard that the investors have set. But of course, one reality is you have to really realize that these small producers are really very small. I can give you one good example in the Philippines, because I am based in the Philippines. It just came from Davao. And now we are helping our coconut producers, the coconut farmers, who is considered to be the poorest among the farmer in the farming industry. They only earn how much a year? But now they are very happy because an NGO in Davao was able to help them start up something that would increase their income. This is about the cocoa sugar industry now in the Philippines. So they are now very happy because they are not just earning 10,000 a year, 10,000 pesos a year, but now they are earning so much. How can the venture capitalist, the impact investor, help these people? Because now they need 5 million to scale up their business. Because you were talking about certain level of compliance, certain level of standard that they should reach before you penetrate, before you help them. So I would like now to throw the challenges to you. These are small groups that need investment and capital and capacity building. Because
Right.
if you say, I would like to invest in you, but first, you have to develop a certain level of, capacity. But I would tell you, that will be a longer period of time before you wait for a certain level of capacity.
So you need the capital to develop the capacity, and you need the capacity to attract the
Precisely.
capital.
The
So
chicken and egg,
how
no?
do we solve that dilemma?
Yeah, so how?
No, I'm advisor only. So I think, I don't know what form this, artisans or, the producers or the farmers are in. The lot of models that has worked in the past is coming through a producer group, making a cooperative out of that, and then, seek finance. Because individuals, financing for venture capital to individual units at such a smaller scale would be a challenge, because most of them don't have the wherewithal to reach so many people at a time. So one of the experiments which really became successful, I don't know if it will work in your context, we are working with in my previous, work in SIDBI, I used to work with a group of silk weavers, reelers and all. So these were small units, which needed capital. So initially we were working on a lot of capacity building, make their, product good. Then the problem was they needed a lot of working capital, and where do we go? I mean, there was nobody, no banker ready to fund. So what we did is we garnered some amount of money, say, around 10% of or 20% of what they needed, and put it in a bank and told the bank, hey, this is the money with you. Why don't you lend to these 20 people against this money? Okay, so first year the bank gave a bit of money, exactly equal to what the deposit was. The second year they increased it a bit, and after 4 or 5 years, what we realized is, bank is now so happy with these people, they have refunded the deposit to SIDBI and said, hey, these are good clients. So there has to be somebody to take the catalytic, investment approach, whether it is a donor, whether it is a development financial institution or somebody, to create the credibility for these individual entities, to move to the next level.
Now you were talking about someone in the middle to handle that. And who is that someone? Perhaps we should be able to answer that. We're talking about connecting markets through the ecosystem, and yet we're posing another problem, that there must be someone who should be managing that kind of, investment that you would like the ecosystem or the farmers to be in the process. I mean, how do we connect them when we are saying that there is another problem? So.
Let me try to answer. There are organizations out there. One, TechnoServe is a big one. I'm not sure if they're active in the Philippines, who help farmers come together and create those cooperatives. There's another group called Root Capital, which again I'm not sure is active in the Philippines, but they help farmer cooperatives find buyers, major corporate buyers for their particular products, and then actually does the financing around that. So those are just two examples. There are a variety of intermediary groups that actually do work in the agricultural communities to help do that intermediation and then find the funders. And that's the kind of thing that Philippines should develop if they haven't already.
We're actually working through Oxfam's Enterprise Development Program in the Philippines, and we've been providing support to a moringa producer or a farmer that wants to be producing moringa for export. So on that path from a subsistence farmer through to much high value crops, access to export markets, looking at those markets, looking at distribution channels, looking to build up cooperatives in and around that hub facility, getting other farmers involved in doing that as well, developing critical mass that then gives you greater buying power. So that's something that we've been involved with in the Philippines over the last 2 years, and that's very much through Oxfam. Now, how that came about was because we're constantly reviewing through the EDP program pipeline organizations that are being bubbled up through the local networks that they have in the country. So quite how that link works, quite how organizations become on Oxfam's radar, to be honest, I couldn't tell you. But once they're there, we're very much involved in that process of sort of screening and looking at various criteria. For me, the most important thing is, does an idea have sufficient potential such that with the right nurturing and support, it can actually get to the point where we think it's got the potential to attract equity investment. And that's what we've been doing with this one farm, which has now become a cooperative, or is at the verge of becoming a cooperative, and that cooperative then seeking capital investment.
Let me take one more question from the audience in the back.
Oh, another question is, I can just...
Okay.
Well, maybe just to add quickly, hi, I'm Joanne from LGT Venture Philanthropy. And maybe speaking as somebody who has looked at investments in the region for the past 3 years, and as someone also based in the Philippines, I think that what I notice, is that impact investing or venture philanthropy obviously is focused most of the time on kind of high growth type organizations that have the ability and potential to scale and therefore have the management teams in place who can carry that out. But over the past 3 years, I've seen a lot of organizations like Ramon has mentioned that are kind of small, cooperative type farmer group things, and they might grow at 10% a year, but don't really have ambitions necessarily to at once, or capacity even to scale to 500 or 1,000 or so. And for now, I would admit that I don't see kind of many financial institutions that kind of are there to address that need. And I think that in the space of impact investing, I mean, you have a lot of us, I think, in the venture capital, private equity kind of space wanting to fund the growth stories. But on the kind of SME type loans, I think that, the rural banks, funds who are more focused on just providing working capital loans need to come in, and it's not that I think, like an LGT venture fund can necessarily go from becoming a VCPE type thing and doing the small and medium loans that these institutions need. So it's a bit needing other players to come in. I think maybe the Peace and Equity Foundation has some things around this, but I just wanted to kind of throw that in, that there is a value chain and that, different people need to come in to fill those things.
Okay. Thank you, Joan.
Rob, sorry, could I just actually take that point up by asking a question of the audience? Of the investors in the audience, how much appetite is there for structuring programs that have financial support for pre-investment pipeline work? Is that something that could be structured into impact investment funds? Is there appetite for that? Do the numbers still work?
Well, go ahead, Joan, but I was just going to say, I mean, we do see a few examples of funds where they raise their investment fund and then alongside it they raise a kind of a grant, a donor fund that can pay for that. But that's, I could probably name 2 examples of that, but there's not that many more, and it requires the people to really set aside separate pools because it challenges the investment returns quite dramatically if you do that within the fund.
Sure. Absolutely.
Yeah.
I've certainly come across it in sort of post-investment support context, but very rarely in pre-investment.
I think from our side, and it took 3 years to get here. Like it's a newly launched thing, and Wolfgang mentioned it earlier briefly, is when we saw that there weren't enough organizations, at least by our standards, that met all the criteria so that we could invest 200,000 to $1 million into them all at once. We saw the need to go earlier and develop the pipeline. So this year we've launched an accelerator program for early stage companies in Thailand, Vietnam, Indonesia, and the Philippines. We offer about 0 to 50,000 more or less in early stage capital. That's loans, equity, and in some cases grants. But it's paired with an on-the-ground business consultant who almost acts as a mini investment manager and really provides like business support to those organizations, like 2 or 3 per country, in partnership with a local entity like Change Fusion or like CSIP in Vietnam, who then is able to leverage the local contacts as well as the local lawyers and things like that. So that's one thing. I think also, for example, Grassroots Business Fund, I know it's not quite pre-investment, but in terms of responding to the market, they saw the need that a lot of companies don't necessarily want growth capital, they just need working capital. So, for example, they developed the working capital facility for companies there in the region, in Africa and Latin America and things like that. So I think there's a lot of space for being more responsive to the needs of different kinds of enterprises in this space of being socially environmentally responsible. I think at the same time, as was mentioned already, there are return requirements to be considered and boards and things like this, and those kinds of changes take more time than we'd like. Like you see the need, and then a year and a half later, you come up with something that responds to it.
Thank you.
We've started a little late, but I think we're going to have to wrap up pretty soon for lunch. I want to end though with throw one softball for Randall, which is I wanted to talk about how do we grow the ecosystem for impact investment in Asia, and I'll ask what role can ANDE and other similar organizations play in building a strong ecosystem.
That's kind. And I do play on a softball team that I missed. We won our first game of the season yesterday when I was on the plane. So that must give you some insight on the value that I add to that particular team. So what I would say is, look, ANDE's role and the role of whether it's ANDE or some other group is one of the things you need to do is to really promote knowledge sharing. This is a nascent industry. And like any nascent industry, there is a value in having an organization or organizations that bring you together to share insights. So what we've done is created a whole variety of different mechanisms to have our members share their knowledge from across geographies. So we have groups that focus on women's entrepreneurship, on youth entrepreneurship, on capacity development services and how you classify them and pay for them, on capital aggregation, and to some of Rob's points, the different types of money that flow in and how you can actually structure deals. We also have regional chapters, including one in India, where the members talk about the specific issues of those particular environments. So I would echo what we heard this morning, that you can't talk about an Asian impact investing segment, right? Every country is different, and in fact, if you think about a place like India, I mean, it's massive. You need to think about regional within subnational regions around metropolitan areas, because the environments and the industries and the financial capacity is entirely separate. So we want to continue to expand and actually allow for our members to talk about the specific issues that exist within those contexts. So again, that's somewhat of a softball, which hopefully I hit at least a double on. That's a little self-serving about ANDE, because we're eager to grow in this part of the world and add to our members. But to all of you, whether it's ANDE or some other, think about what organizations you can join that actually bring together the ecosystem players, so that you can have investors talking in scenarios like this to the social entrepreneurs and all the players around it, and come up with joint solutions, because there's a lot to be invented here still. We don't know most of the answers. It is a place where innovation is needed, and hopefully we can help foster it.
Well, yeah. I mean, one model clearly is, and it seems to resonate with the law firms particularly, is for those firms to either do, as a very small percentage of what they do, to provide pro bono services to social enterprises. And more are considering, where they used to only do that for charities, true nonprofits, they're more and more beginning to offer those types of pro bono services in certain cases to for-profit social enterprises. Or as Abhijit mentioned, in India, there's a practice of offering very low rates for social enterprises. But I guess another related question would be, is there a subsidy model where there might be an outside funder who's willing to fund maybe full rate or close to full rate services from the traditional firms? Or is that still too rich for even the donors in the space?
I was going to say something else, but you can cut me off.
We do need to probably move to lunch, but last words?
You don't want to eat, do you? Mark, go ahead.
I was just going to add very quickly. I think what we're talking about here is basically a discontinuity between markets. When you've got established traditional consultancies that are used to leveraging commercial rates that their shareholders have become very accustomed to, it's very, very difficult then to project those same day rates under that same structure into the markets that we are talking about here. So financially secure. So they can be providing very, very high quality professional services through challenges. The other model is ADP, Accenture Development Partners, and their subsidy model is based on high performing individuals can elect to take a 50% cut in their salary over a short period of time, to be delivering those. Yeah, I mean, there's absolutely no doubt that there is an adjustment to be made, let's say. So it's very, very different when you're providing services to multinationals or even large SMEs. When you're talking about very, very nascent businesses or entrepreneurs, that the approach to that is very different.
Okay, I am afraid I think we're going to have to wrap up now. I think lunch is actually served, so it's not buffet, so it's served. So if you could all please join me in giving a round of applause for our panelists. I have a very small thank you gift for everyone.